All right. So warm greetings to all of you colleagues once again, and welcome to our 5th lecture session in Accounting 1B. So the purpose of today's engagement is to equip you for your upcoming test, which is being written on Friday. That is 2 days from now. So the approach that we'd like to use in the first segment, because we've got about 2 hours, probably I might extend just to make sure that we cover as much as possible to ensure that you're fit for Friday. So I want to, first of all, take you guys through a refresher background on the debtors reconciliation process. And I'll also take you through the refresher, program on the creditors reconciliation process. And then we will endeavor to look into some exercises at the back of your textbook. At the back of each one of these, of this topic, learning unit 2. So we're going to try and look at quite a number of those activities to make sure that at least you are hands-on, familiar with the type of questions they can typically test you guys for the purposes of your test. Is it fine if we can use that approach?
Yes, sir.
Yes, sir.
All right, brilliant. So without any further ado, I'm going to share whiteboard screen quickly. And so what I want to start by explaining for now, it's typically what you have on page 28 of your textbook, but it literally sums up everything, even up to page 31. But I just want to make it simplified so that you understand what you are dealing with. So to begin, what I would start with for today in this discussion, I would start with the debtors reconciliation first. All right. Okay. Can you see? Okay, let's do this. Okay, great. Debtors reconciliation. So that's the concept I want us to start with. Right. So here's one of the important things that you guys need to understand. When you perform a debtors reconciliation, essentially what you are trying to reconcile is 2 things. You're trying to reconcile your debtors ledger your debtors control, so to speak, that's what we call it. Let me try to put this here. Let me just have this nicely written so that it's properly presented. Right. So it is your debtors control according to the general ledger and you want to reconcile this according to the debtors list. Now, under normal circumstances, you'll be given balances. For instance, you'll be given a balance according to the debtors control. Same story, you'll be given a balance according to the debtors list as well. But one of the important things that you need to discover is that there would be differences in terms of those balances. So for instance, the debtors control balance could be stating that the customers that acquired goods from us on credit, because obviously for us to have debtors control, it is as a result of the company selling goods on credit to customers. So these are people that are owing us money as a business. So they could be, according to the debtors control in the ledger, it could be that they are owing us 11,000 rand. And then according to the debtors list, now a debtors list, what you find there, it's a record that lists all the individual debtors that owe us money. That's what you see in the debtors list. So it indicates each individual debtor's balance owing to the company. So it could be debtor A, debtor B, debtor C, debtor E, depending on the number of debtors that the organization have. Are we together? So maybe according to that, when we totalize all of those debtors balance, we find out maybe they are owing us, let's just say 5,000 rands. Right. So now the question is, why is it that there is a difference in the balances reflected according to the debtors control in the general ledger and the balance as per debtors list over here? Why is it that there is a difference between the two? And that is the question that is answered by performing a debtors reconciliation. So now, for us to do that, for us to have balances that are corresponding in terms of the balance of the debtors control and the balance of the debtors list, we need to identify the following. We need to identify the differences. And those differences, it can be in the form of omissions that were made when we were doing the recording in the debtors control or in the debtors ledger. Or sometimes it can be as a result of errors that were made in recording, whether in the debtors control or in the debtors list. So that is why you find out there will be differences in terms of these respective balances in these two different records. Both of these records, by the way, they are records of the organization, both of them, but there can be differences in terms of their balances. What causes that difference? It's simply because of these two things. There was an omission that was either made on the debtors control side, or there was an omission that was made in terms of updating our debtors list. So for example, like I've indicated, on the debtors list, you see all the different debtors that the company had. So it could be that debtor A was owing us something like 10,000 rands. Debtor A actually paid us 7,000 rands, but we never updated that information on our debtors list. Now, if we don't update that information on our debtors list, guess what? That is one of the reasons why you might find that this side of the balances on the debtors list, it will remain the same, whereas this could be updated, for example. So what do we then do when we identify those omissions? If it's an omission on the debtors list, it has to be accounted for in the debtors list. If it's an omission on the debtors control, it has to be accounted for in the debtors control, all right? And it's very important to understand what type of omission is it. Is it going to cause that balance to increase, or is it going to cause that balance to decrease? So these omissions can either increase, let me do it this way, because I want you guys to understand whether it's an omission or it's an error. One of the things that can happen, it can either increase your balance. When it is increasing your balance, it means it's a debit entry on your debtors control. Or it can decrease your balance. If it's gonna decrease the balance of your debtors control, it means it's a credit entry on your debtors control. Very important to understand that concept. Why is it that an increase, it has to be debited on the debtors control? Why is it that a decrease, it has to be credited on the debtors control? It's very simple. Simply because debtors are assets to the business. So if I'm to draw a ledger for you, if I'm to draw a general ledger account, which is one of the things you're likely going to be requested to do in the exam. If you draw up a ledger account called debtors control, it will have a debit side where it will increase, and it will have a credit side where it will decrease. Very important to take note of that. Why is it increasing on the debit side? Why is it decreasing on the credit side? It's simply because of this concept, because of what I'm about to indicate. It's because debtors by nature are assets to the business. Are we together there, colleagues? That's why debtors increase on the debit and debtors decrease on the credit side. Now, given that analogy, so how do we record transactions in the debtors control? Very simple. All right. At the beginning of every month, let's say the month of August, which we are in. So it will be August here. On the 1st, you'll be given balance brought down like that. That will be your opening balance. Always mostly on the debit side, given that there were people owing us money from the previous month. So obviously we have an opening debit balance in the debtors control. Now, during the course of the month of August, we can sell goods on credit to our customers. So if customers buy more goods on credit, guess what's going to happen? Maybe it happened on the 15th of August. You're going to have to record sales here. And these sales, where is it coming from? Because we are dealing with sales which were done on credit, it will be coming from the debtors journal. And in the debtors journal, which you can see on, if you can kindly go on page 31, at the bottom of page 31, I want you guys to exhibit that. So if you have your textbook with you next to you, please go on page 31, because I want you guys to be able to see what I'm talking about. If you go on page 31, are you guys there now?
Yes, sir.
Yes, sir.
Awesome. On page 31 at the bottom, there's a journal there written debtors journal. Do you see it? Of Litsima Finishers. Do you see that? So now, that journal, it simply records, and so I want you to put a note next to that journal in your textbook. Just write credit sales. Next to it, just write credit sales records. So indicate the credit sales records, meaning to say in that journal, what we only record there, it's anything that has to do with sales to customers which were performed on credit. That's what you put in the debtors journal. And I want you to look at a column written debtors control column. Do you see that? The debtors control column? Now, if you look at that debtors control column, they've totalized that column to give you 53,194 rands and 70 cents. Now, that amount, in fact, so that I can do with illustrations, I'm going to use figures now so that you guys understand clearly what is going on.
Sir?
Sorry?
Hello, sir. Where's the debtors control column? Which page?
Page 31.
But I only see the debtors journal, and then that's credit sales records. But
No. On page 31 at the bottom, if you look in the debtors journal, right? There's a column after folio, which is written debtors control.
Okay.
You see it now?
Yeah. And what do we label that as? Or what do we?
Right. So what I'm trying to now indicate to you is that that column that is written debtors control in the debtors journal, that's the one that the total of the debtors control column is what you transfer to the debtors control in the general ledger as sales. And you indicate debtors journal. And you take that amount of 53,194.70. That's what you record it as in the debtors control. Are we together? Did you understand what I just did there, guys?
Yes, sir.
Michelle, did you get it? Or you're still a bit confused?
No, I understand.
Oh, okay, perfect. And another important thing that I want you to understand, guys, the debtors control column in the debtors journal, it's an amount inclusive of VAT. Do you see that? How so? How do I mean? Because if you look at the sales column, Do you see the total? It's 46,256.27. And then the debtors control column, it's how much? How much is the debtors control column?
53,194.
Exactly. Now, I want you to look at the output VAT column. I want you to take 53,194.70, subtract 6,938.43. It should give you 46,256.27. Please do it now. For my calculator. Yeah, I got it now. Did you get that?
Yeah, I got it, sir.
Yes, very important. So why am I saying all of this? Because you need to understand, they would bring a question where they'll say that this particular business, it's a VAT vendor. So if it's a VAT vendor, it's important to know what information to put in your debtors control. Most of these amounts that are put in here, they are inclusive of VAT. For as long as the business in concern is a VAT vendor, it's very important to take note of that. So now, that's what you transfer. Okay, ignore the dates, because obviously the dates may not correspond to what we have there. But ideally, what I wanted you guys to understand is the fact that this transaction written as sales, it will come from the debtors journal, and you take the total of the debtors control column in the debtors journal. That's what I wanted you guys to understand. Then the next thing that can happen in the debtors control, so the balance brought down in this case, if I'm looking at that example 2.1, let me see if they gave you anything to do with balances. I'm just checking that. Let's see. Well, in this particular context, it didn't seem like they'd given you any opening balances as such. They had not given you any opening balances. Otherwise, they would have indicated it. Are we together? On this particular example that they gave you, they did not give you any opening balances. But if you don't mind, we can switch to, I'll tell you now, an example where there's an opening balance that they've given you. I'm just trying to check one here, because I want us to be more practical with this discussion, other than just me giving you theory. I want you to be able to see where this information fits in. All right, I want you to go to example, question 2.4 on page 44. Go on question 2.4. So what it means now, I might have to adjust this so that we can use example, so the question 2.4 to do the illustration of this debtors control, because I want you guys to understand what is going on there. Or maybe what I can do, first of all, let me give you the framework of this debtors control, what is supposed to be in there, and then we can then use practical figures using question 2.4 afterwards. Is it fine? Because I want you guys to understand what you are supposed to put in there and where it's coming from. Then we can do a practical illustration of that. Is it okay?
Yes, sir.
Yeah, I think let's do it
Yes, sir, no problem.
so that at least you don't get mixed up. So first of all, normally in the debtors control, there has to be an opening balance. You put the amount like that. And then the next thing, let's assume there were sales that took place on the 15th. So it will be sales, and it will be coming from the debtors journal in the debtors control, from the debtors control column of the debtors journal. And then you take that total figure, that's what you put here in your debtors control as sales. Now, sometimes what can also happen is that you might be charged interest for you might charge interest to the customers for the late payments. We call that interest on overdue accounts. Interest on overdue accounts. Where would this information come from? From the general journal. That's where it will come from, the general journal. Now, not only that, on the credit side, it's anything that would reduce your debtors control column. Your debtors control. So what is it that would cause the debtors control to go down? It's very simple. Remember, all of this, which is causing the debtors control to increase, is because you are selling goods on credit to your customers, right? And then also, if they don't pay on time, you charge them interest. It's increasing whatever that they are owing to the company. So now, what would then begin to reduce that balance is whenever they begin to pay. So let's assume this is August on the 30th. They effected a payment to us. So you'd write bank, and it will be coming from the cash receipts journal, and you put the amount over there like that. So when customers pay to set off what they are owing to the company, it reduces the debtors control. So if I have a ledger like this, it will be recorded on the credit side as bank. Right. That's very, very important to note. Then the next thing that happens, sometimes if the person pays on time, we can offer discount. We call that settlement discount granted. Settlement discount granted. Why? You're the one that's granting it to the customer, isn't it? So it will be recorded from the general journal. You put the amount over there like that. Settlement discount granted. It's coming from the general journal. It reduces the debtors control balance. But now, another thing that can also happen that reduces the debtors control, it's a case whereby a customer fails to pay their balance that they owe to us. Maybe because they no longer have the capacity to afford to pay. So what we do as a business, sometimes we can write off their account, and we call that credit losses. Credit losses. Credit losses are recorded from the general journal. Put it like that. Something like that. Now, that's what, again, reduces your debtors control.
Sir?
Yes?
I just wanted to know what would be an example of a credit loss? Like, I know you said when the customer's unable to pay, but like if they were to put it in an example in a question, like how would they word it?
You just go to the general journal. Under the narrations, they would literally state to you that this is credit losses. I'll give you an example, maybe so that you can see something like that. I'll tell you which example. Let me see here. Right.
Sir, I found one. Never mind.
You said what?
I found one, page 33.
Page 33. Okay.
Yeah,
Let's
I
go to
just saw
page
now.
33. So to the benefit of everybody, right? So on page 33, you saw the credit losses that were debited general in the general journal on page 33, journal entry number 6, where they say journal voucher 6. Do you see GV6 there on the 20th of that month of April? What did they do? They debited credit losses, isn't it? And then they credited debtors control. So by them crediting the debtors control, that's exactly what we did here. Now it's making sense, right? And where is it coming from? From the general journal. On that page 33, what journal entry is that? That's the general journal. So that's where that information would come from. So it will be given more or less like the way it appears on page 33. And sometimes what they do, they can also tell you in the additional information, apart from displaying it exactly from the general journal like that, they can tell you as an additional information transaction that transaction so and so and so, the customer failed to afford to pay, so we have to write off their account of this amount. So they say that maybe it's 3,000. So just know that it's credit losses and it has to be credited to the debtors control account. So sometimes it's not always that they'll give you a general journal like that. Sometimes they can just bring it as additional information. You must be able to interpret from the additional information that you are dealing with the credit loss, and what do you do with it. If you're dealing with a debtors control account like this, you always put it on the credit side and you indicate it will obviously be recorded also in the general journal. I hope it's making sense, colleagues.
Yes, sir.
Yes, sir.
Lovely. Right. So now after you've recorded, so these are the things that could possibly, reduce your debtors control balance. But now I want you to pay attention to something that is very, very, very important, because this, which I'm about to mention now, you normally find it as part of your additional information. You normally find this one as part of what? Additional information. So sometimes they can tell you an error took place whereby an invoice that was received from a supplier was recorded in the debtors control on the debit side. So I want to write this one in red. Notice, so they can say something, they can record it maybe as sales in your debtors control. They might record it like that, or they'll tell you that's what they did. And notice this was an error because it was not sales which were made to the customer, but we were the ones actually buying, but we recorded the invoice as though we were the ones selling. So it's a mistake that took place. So the accountant can record it as if they were the ones selling in the debtors control account, and then maybe they put the amount there as 2,000 rands. Okay, there's something else I omitted on the credit side, but I'm going to write it down afterward. So if you have something like this, and notice this is something that is not supposed to even be on the debtors control, because it's relating to creditors. So how do you deal with something like this? So they tell you this is what they did already. So when you correct this error like this, because it has nothing to do with debtors, if they'd already debited it like this, when you correct that error, colleagues, you put it here. Okay? So you do the correction of that error on this side. So you'll be crediting the debtors control. But it does not end there. It does not end there. So yes, you've taken it out of the debtors control, but remember, it still has to be recorded to the right place. So if you have your creditors control, which I'll talk about shortly, if you have your creditors control already drafted, creditors control account, this one, it's a liability, guys. So where do liabilities increase and where do liabilities decrease? You should know this by now. Which side do liability increase? Do they increase on the debit or do they increase on the credit side? You should know this by now. And it's, by the way, just to give you a hint, it is the opposite of an asset. Yes?
Credit side?
Mm-hmm.
Increases on the credit side.
It increases on the credit side, yes. And then it decreases which side? On the debit side. Why? This is a liability, remember. So obviously, like any other account, it should have an opening balance. So let's say maybe this is August the 1st. You'd have a balance somewhere there. Balance brought down and you put in the figure. All right, I'm going to talk about the items that are supposed to be there later. But for now, I want us to pay attention to what I've just stated here. So you have something that is foreign recorded in the debtors control, which relates to the creditors, and it was debited in the debtors control. How do we deal with it? First of all, we have to credit the debtors control by that amount which was debited. So if they debited 2,000 rands, which related to creditors control, what do you do to take it out or to correct the error? First of all, you credit the debtors control with 2,000 rands to take out that amount from the debtors control. But it does not end there. Since it was relating to creditors, you have to then account for it accurately or correctly. How do we do that? In the creditors control, maybe it was on the 2nd. Since it was an invoice, obviously, you have to record for it correctly in the right place. So it will be relating to purchases. And where would this be coming from? It will be coming from the creditors journal. And then you put the amount 2,000 rands like that. That's very important what I've just explained to you right now. And what is this that I've just explained? It's an example of an error. And where do you get this information? Normally, you can find that information in the additional information, or sometimes they can just give it to you plainly in the general journal. That's where you normally find that info. Okay. So you need to pay attention to stuff like that. Now, what example can I give you? Well, if you go to that question 2.4, there's one such a transaction like that you can see. Let me see. Okay, but the error they have there, it was okay, it was relating to something else. But in question 2.6, I did saw something like that. I did saw something like that. I'll tell you which transaction which you can look at. Trying to look for it here. Just a moment. I'm trying to look for that transaction.
Sir,
Yes.
isn't it question 1 in 2.6?
Yeah. Question 1 in 2.6.
Wasn't there an error?
2.5. Sorry, that's why I'm like wondering what's happening. Okay, let's see. No, it's not the same. It's different. That one I was going to explain about it. That's the one that I was saying that I omitted something like that. So the one in question 2.6, it's one whereby it has to do with purchases returns. All right. So normally in the debtors control, there's something called purchases return. I'm sorry, not purchases, it's sales return because you're selling. So there's something called sales returns that you're also supposed to account for. Okay, I need to save this thing. I don't know how do I possibly save it here because, all right. So there's something called sales returns. It normally comes from the debtors allowance journal. Debtors allowance journal, that's where it comes from. So that's the typical example of what you have in question 1 of 2.6. But you see, 2.1, it was a mistake. To get it, it was a mistake whereby instead of crediting this debtors allowance amount, they debited it instead. But sometimes you can have something like what I've just done here in red. So now this one that you have in question 1 of 2.6, where they say the total of the debtors control column in the debtors allowance journal of 1.2 was posted to the debit side of the debtors control. So it's like the debited sales returns here. So the debited sales returns, as a mistake, it was not supposed to be like that. So they recorded it like this. So question is, how do you correct something like that? It's very simple. So the first thing, and if you may allow me, guys, because of space, I just have to erase this one of 2000 that I had given you. Okay, because I want you guys to see how you do the correction of the errors and stuff like that. All right. So now, here's what they did in question 2.1. So in that question 1 of 2.6. So they did this. Let me just use a different color as well, I think. Let's use red. So they recorded sales returns on the wrong side of the debtors control column. Notice this was an error. It was not supposed to be like that. So that 1.2, they had recorded it on this side like that. But remember, it's not supposed to be that way. So what do you do first? You have to correct the error by taking it out by recording it on the opposite side. So here the correction has to happen on this side where you record 1.2. But it does not end there because since it was recorded in the wrong side, we need to then record it to the right side. Are we together? Then the question is, how do you record it to the right side? It's very simple. First of all, we've corrected the error. Then we have to record it the right way. So to record it the right way, this is where you write sales returns this side, and then you put that 1.2. No wonder if you look on the credit side, according to page 53, when you totalize the credit side of for that transaction 1, it will give you 2.4. Where is that 2.4 coming from? First of all, it's coming as a result of there's a 1.2, which is the correction of this error that you recorded on the credit side of your debtors control. And then there's another 1.2 that you then recorded still on the credit side of the debtors control. Why? Because you are now correctly accounting for that sales returns. So when you take the two together, that's where the 2.4 is coming from. Does it make sense? Colleagues,
Yes, sir.
is it making sense? Matubu, is it making sense?
So I think my issue is understanding when we should add the same
two
amount
together.
like twice.
Yeah. So you know what you should do, ne? To make it easier, you need to analyze the transaction to understand what is happening. What error, especially with errors, it's very important because they can be tricky. You need to understand what happened for that error to happen. Okay, guys, we're left with a minute. Can we reconnect again? And then I would carry on from here. I'll carry on from this in the next video. So that, and then I'll answer
Yes,
your
sir.
question.
Okay, no problem, sir.
Yeah. Okay, perfect. Because it's
Sir,
gonna cut just now.
what time are we connecting again?
Just now. So as soon as it ends, it will take probably a minute or two for me to restart another meeting. But you just use the same link that I've shared on the group, on the WhatsApp group.
Okay.
Yeah, just one or 2 minutes, and then you connect again, because it's gonna cut us off just now.
All right, sir.
Away. Thank you, guys.
Sure.
All right.